Good afternoon and welcome to this edition of the Earnings Corner. General Motors, the motoring giant who are best known for their Buick, Cadillac, GMC and Chevrolet vehicles, reported a 16th consecutive profitable quarter. However, consistent losses in the problematic European division continue to punish their results. General Motors has recently changed their management team and continues to make good progress in the core European market. However, America's biggest automaker seems stuck with problems arising from the poor sales in Europe. Reports have shown that they earned $913 million in the fourth quarter, which is a 2% rise over the period from a year earlier. Global vehicle sales have risen by around about 5% in the quarter, and in North America, pre-tax profits have risen sharply. However, overall, profits at General Motors have fallen by 22% in 2013. Due to a disappointing performance outside North America. This will displease General Motors chief exec Mary Barra, who has given her first set of results on Thursday. Despite this, earnings have remained depressed due to restructuring changes with the plan to reduce worldwide losses. This includes $691 million in relation to their decision to cut the problematic strategy of selling Chevrolet vehicles in Europe. Of the billions lost in Europe over the last few years, the Chevrolet project was the largest setback for them. General Motors has not been the only automaker to suffer, as their biggest rival Ford have also seen troubles in Europe, where demand for new vehicles has been in a prolonged slump. Despite these troubles, the chief exec officer, Chuck Stevens, has stated that Europe is improving. However, South America still remains a risk due to currency fluctuations. General Motors have lost sales of their pickup trucks to competitors Ford and Chrysler, as they have dramatically increased discounts on their models. However, General Motors are sticking to their guns and persevering with selling their cars and trucks on a value play rather than price, as they are not in the business of selling at a loss or even operating on wafer-thin margins, especially when the quality of their product is so good. Overall, as a long-term investment, I like the idea of General Motors, as a recovery takes hold in Europe, which at the moment is the only reason for their losses. It should act as a catalyst for the share price going forward and only push them up. For that reason, I have General Motors as a buyer. Thanks for listening and tune in next week.